Right now, the average driver is paying over $700 to just watch an asset rot in their driveway. Today, we're going to settle the ultimate financial debate once and for all, and that's should you buy a used car or finance a brand new one? Now, to understand this choice, let's start with a picture that we've all probably seen. You know, it's a crisp morning, you walk outside, and sitting in your driveway is a brand new car, and the paint is flawless, the wheels are gleaming, and when you open that door, you get hit with that new car smell. And it's a physical manifestation of your own hard work, and you start to feel successful and you feel secure. But then the calendar flips to the first of the month, and suddenly that beautiful machine in your driveway starts to look less like a symbol of freedom and a lot more like an anchor. Now let's look past this marketing. Let's dive into the cold hard numbers of the current market and ask the question that actually matters. What are you willing to trade for that piece of metal in your driveway? If you walk onto a dealership lot to finance a new car today, you're not just negotiating the price of the car, but you're also negotiating with the macroeconomic climate. Now, according to recent data, the average monthly payment for a new car has climbed up to a staggering $767 a month. And that's even if you have excellent credit. You're looking at average rates of 7% on a new car. And if you're looking at a used car or have average credit, that number easily climbs into the double digits. Now, here's the real kicker. That $767 is just a loan. When you add in the cost of comprehensive insurance, which has skyrocketed over the past couple of years along with fuel and basic maintenance, your actual out-of-pocket cost to keep that new car on the road is between $1,000 and $1,200 every single month. In fact, nearly 1 in 5 new car buyers today is locked into a monthly payment of over $1,000 just for the loan itself. Now think about that, $1,000? That could be part of your mortgage payment, and it's still a massive monthly wealth drain. But here's the peace of mind you're buying when you finance a new car. You get a bumper-to-bumper manufacturer warranty, so if the transmission blows up at 15,000 miles, it's the dealership's problems, not yours. And you typically get lower interest rates. Ironically, manufacturers often incentivize new cars with lower promotional APRs, sometimes even 0% to 3.9% if you have perfect credit. Whereas used car interest rates are historically much higher, and they're averaging over 9.9% to 11.5%. And the nice part about financing new is you know exactly how the car was driven from mile one. There's no hidden accidents or any skipped oil changes and no mystery noises. And a lot of the times you hear about deals where they'll hold 0 to only 3% APR for the first 5 years out of the 7-year term of the loan you have, and that's a pretty good deal. It cuts into a lot of the interest you'll be paying later down the road. But of course, with buying any vehicle, the moment you drive that new car off the lot, its value absolutely plummets, and you're immediately underwater on the loan, probably owning more than the car is worth. And you're paying interest on an asset that's actively dying. And that's not just to limit this to financing new cars alone, that's for any vehicle. Now, to get that affordable payment, the average loan term now is 72 months. So that is 6 years of your life committed to a depreciating asset. And that's typically where the classic used car playbook comes in. This has long been the debate of personal finance, but even here, there are nuances we can't even ignore. Now, the pros of buying a used car. The original owner already took the massive 20% to 30% depreciation hit. You get to buy the same utility, the same technology, and the same basic transportation for a fraction of the cost. And you'll end up with a lower loan principal. So the average used car loan is around $27,500 compared to over $43,500 for a new car. Now, borrowing less means you owe less. So you pay less total interest and you pay it off faster. And if you buy a cheaper used car, the holy grail becomes possible. Paying cash. When you write a check and just walk away with the title, you have 0 payments, your monthly carrying cost drops to gas and just basic insurance. And here's the thing, modern engines and transmissions are built to last far longer than those of the past. A 5-year-old car with 60,000 miles is often just broken in, making the used car decision less risky than it was 20 years ago. But here's the wild card with used cars. Used cars break, and when they do break down on you, you're the one paying the mechanic. If you save $200 a month on payment but have to drop $2,000 on a new head gasket, did you actually win here? And typically for the lower and middle class, they're not able to just pay off a vehicle off of a used lot right away. So they're gonna have to finance used cars, and bank rates right now are really brutal. They're routinely hitting an average of 10 to 14% for average credit, and you might be borrowing less money, but you're paying a much higher premium to borrow it. So, you've heard the pros and cons. How do we break this tie? Well, to make the right choice, let's take a look at a concept that isn't really written on any window sticker at the dealership. Let's talk about opportunity cost. If you look at a spreadsheet, buying a reliable 3 to 5-year-old used car is almost always the mathematically superior choice. And it preserves your capital and prevents you from paying interest on a depreciating asset. But the thing is, personal finance isn't played on a spreadsheet, it's played in real life. Now, being debt-free isn't just about having a higher net worth, it's also about sleep. It's about looking at your bank account on the first of the month and realizing that nobody owns you. It's the peace of mind that comes with knowing if you get laid off or if your business has a bad quarter, you won't have a repo man looking for your keys. So taking a look at the true trade-off, what does $1,000 a month actually mean to your lifestyle? Well, it could mean the difference in your housing. It's the ability to afford a safer neighborhood, a place with a yard for your kids, or maybe a shorter commute that gives you back an hour of your life every day. And with $12,000, that could be 2 incredible life-changing international trips every single year paid in cash and no debt. Or it could just be your peace of mind. It could look like having a massive, overflowing grocery cart of high quality, organic food without looking at the prices. It could mean funding your hobbies and paying for your kids' sport leagues, or investing in yourself through coaching, books, or starting a new side business. At the end of the day, what I'm trying to say here is you gotta ask yourself, what do I value more? Do you value the perceived status of having a brand new car or luxury vehicle? Or do you value the freedom to book a flight on a Tuesday because you felt like it? Do you value the smell of new leather? Or do you value the quiet confidence of a thick savings account? There's a lot of good points here, but how do we make this practical? If you want to buy a new car, don't let me stop you. I'm not telling you don't do it, but don't lie to yourself and call it an investment. It's just a consumption decision. It's essentially a luxury. Now, if you're gonna buy new, follow a strict rule. It's typically known as the 24-10 rule, where you put at least 20% down, finance it for no more than 4 years, and ensure the total monthly payment is less than 10% of your gross income. And if you can't do that, well, just embrace the used car. Hunt for the 5-year-old sedan with a clean service history, and let someone else pay for the depreciation of the new car. Take that $500 or $1,000 that you just saved every single month, pour it into your life, your experiences, or your freedom, and your future. And then remember, a car will just get you from point A to point B, but that financial freedom can take you anywhere in the world. Let me know in the comments below what you like to typically do. Do you buy used? Do you buy new? I've never been into cars myself. I'm a motorcycle guy and a truck guy, so I totally get it, but I like to keep a level of rationality to keep my bank account safe and my mind sane. Let me know in the comments below, and I'll see you guys on the next video.